estate, the saying is you make money when you buy. That seems strange because really you make money when you sell. But what they're saying is if you bought at the wrong price and you try to sell it and make a profit, but you bought too high, then that means you're going to lose money. We see this all the time in stocks, crypto, and options. So today I want to directly talk about specificness of what happens about where we want to buy and how we want to buy. In our Discord, you'll see daily alerts. And with Sell the News alerts, we're looking for a big pump and then a dump. And we kind of see that with the V pattern. A big run up, then a parabolic sell-off, little pullback, and a parabolic sell-off again. So when price comes into resistance, we take the trade and instantly make money. Because of this huge sell-off, trailing stop strategy also works perfectly. Price never comes back and gets you out. And that's the best case scenario. Instant gratification of money. But out of the 4 possibilities of strategies, V-shape is only one. So technically speaking, that means 25% of the time you could have a V-shape where you have no problems, instant money. But that also means that 25% of the time you could have a double top. Also 25% of the time you could have a head and shoulders pattern. Or it just go parabolic and bust through that resistance, making higher highs. And to me, it's interesting that when you're looking at reversal patterns, they don't really show you a V-shaped reversal pattern. Technically, there's only 2, right here with a double top and triple top, meaning that price respects that resistance and doesn't come above. Unlike these 3, you see that price breaks above that resistance level before going down. Let's dive into this top that holds this resistance line on double tops, triple tops. Also on harmonics pattern, you have Gartley pattern, bat pattern, alternative bat pattern, which all stay below this resistance line before going lower. So in our scenario, Sell the News, price comes up into that resistance area. And if you start putting in stop losses, you would see that strategy doesn't work because price would get you out right here. Then continue in the right direction, which holds true for a double top. Price runs up into the resistance, we get into the trade, start creating trailing stops, and price might get us out prematurely before continuing lower. The same thing happens on head and shoulders patterns, obviously. So that's why trailing stops don't work. So now if we're just thinking about stop losses, there's resistance. We're going to put our stop loss to get out of the trade a little bit higher. This works great for a V-shaped pattern and a double top or a Gartley harmonic pattern. But if the picture looked like this was resistance and you put your stop a little bit higher, then you run into a head and shoulders pattern, it would get you out of the trade before going in the right direction. It might work out on a wedge formation, but it definitely wouldn't work out on an expansion formation. It would get you out before going lower. One fix could be make a range box, which would look like this on a head and shoulders pattern, then create that range box up above, putting your stop loss even higher. This would probably work out on a wedge formation, not getting you out before going lower. But on an expansion pattern with this little move right here, it would make your range box pretty small, taking you out of the trade before going lower. So now that we have the negative in mind of what would happen if we were going to be wrong, and probably going to be wrong because there's so many different scenarios that can happen around each one of our trades. If we get in right at resistance, use a smaller amount of money and just take a quick target of 10 to 20%. The less you demand out of each trade, the more money you'll make back. Consistent profits. Next is when price comes up against resistance, instead of taking the trade here, add 5% and take the trade here. Now, as you see, it would not work here because price never went that 5% higher. But is that okay for you? Less trades, more money. AGL up against resistance with high volatility. But from that resistance level, it went up 14% in 7 days. So what if instead of getting in there, you added 5% to the trade, used a higher strike price, and right now you'd be making money instead of waiting for price to come down a little bit lower. AGL is at 17%, which is great, but I would have more profit already. DAP came up into that resistance line, high volatility, but from that resistance, it went up 6.6% higher. So what if you would have added 5% to the price? You would have got in higher. And also it would have saved you 8 days. DAP's up 30%. It would be up even more, probably already closed out, if I took the higher strike price. BNTX up against resistance with almost 15% in 5 days. What if we would have increased the strike price 5%, it would have saved us 3 days and we'd already be making money versus being down 1%. Qatar up against resistance. If you got in right here, take a smaller profit, 20, 25%. So as price rallies back up, you're already out of the trade. or when entering, use a GTC, which is good till cancel, because this trade went up almost 10% after 17 days. But wouldn't you like to be in this trade right now here? So with this trading system and alerts, I want the highest probability of profits for you. This strategy is not going to make you a millionaire in a month, but what it will do is give you the ability to consistently make profits. So I'm going to set targets of entry points 5% higher than where the current price is. Out of the money. And we all know the best time to get into an option when price is going up, because if price falls off a little bit, then we start chasing the option, getting in, getting all crazy. Be patient about your trades. Be excited that you didn't get into the trade for a week. Know you're against resistance. Know that the trade will come. And if it doesn't, what did you really lose out? How many times have you got into a trade and you felt sick to your stomach because it went against you? I'm trying to prevent that emotion coming. Now, there will be parabolic times. Like FUBU, we got in right here. And I would be a little bit embarrassed that it went against us, 75%. But as you can see, in the next 20 days, it went below our vertical spread strike price, capturing all the profit. But also, you'd learn in Sell the News course, we took another trade here and got a double whammy. So just be aware that our trades are going to be at the money or a little bit of out of the money. So be sure on your option chain to click on your day tab and make it good till cancel when entering into the trade. Do the same thing when you're closing it out. Good till cancel, reducing down your target price by 50% so that it automatically gets you out and you're not having to sit watch the computer. So that it automatically gets you in and automatically gets you out, and you're not sitting there waiting in front of your computer anxiously trying to move every strike price and number to get into the trade. Some trades you won't get into, and that's okay. Like last week on Wish and MVIS, we were never able to get into those trades. But on 7 of the 9 trades, we were able to get over 50% profit. We did not lose on the other 2. We're just waiting for it to reach our target. We have a month till expiration. If you like these kind of trades, go to our Discord, daily alerts, Sell the News. We got a couple videos to watch. Then click here to enter the alert service. This tab will automatically pop up for you. Every day between 8 and 12, you'll get alerts. I wish you the best in trading.